Good evening, ladies and gentlemen. I'd like to welcome you to our Investors Update. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Joining me today is one of our very own investment advisors, Justin Scott. Welcome, Justin.
Glad to be here, Dan. Thank you.
Today, we'll be bringing you brief but insightful presentations on Jamaica Producers Group Limited and Carreras Limited. Be sure to stick around to the end of our program, where Justin will be sharing some invaluable investment tips from our investment corner. Before we get started, I'd like to take this moment to remind you that if you're looking to expand your investment portfolio or embark on your very first investment journey, Mayberry can place you on track to financial freedom. Follow us on social media to learn more. Now on to our first presentation, Jamaica Producers Group Limited. Justin, what do you have for us?
All right. So, Jamaica Producers is a large multinational corporation operating out of Jamaica. It's been around for decades, and I'm sure the viewers would know it from some of its core products, being the St. Mary snacks, right? So you have the banana chips, the cassava chips, the plantain chips, and so forth, as well as it also operates a lot of other segments within their snacks, food, and drink services, right? So, for example, the Tortuga rum cakes. They also operate from the Netherlands to Alhugesto. They recently bought 50% of Cole Beverage Laboratories Limited out in Spain, as well as they've been foraying into new product lines for their actual snacks. So JP is very innovative in the way how they look into their current product lines, trying to read consumer buying habits and trying to figure out what exactly is next for them to stay ahead of the competition, right? But that's only a part of the business. So as a matter of fact, in terms of revenues, the logistics and infrastructure section provide about another 45% of the revenues to them. So in case anybody didn't know, they also own about 42% of Kingston Wharves, which operates through its terminal and port services, right? So Kingston Wharves is actually the seventh. So the Kingston Harbor is actually the seventh largest natural harbor in the world, right? And so Kingston Wharves operates from there 24/7, 365, always bringing in a lot of the cargo and other materials to the country, right? Further from there, they're very active in how they get into business, looking at new opportunities and seeing how best they can optimize their operations. So when I talk about the logistics, it's more than just Kingston Wharves. In 2021, they actually acquired 50% of the Geest shipping line services that operates out of the UK, and they ship the most cargo between that side of Europe down to the Windward and Leeward Antilles. Further from there, they recently just acquired Miami Freight Shipping Services out in Miami, of course. So they actually have a proper step now into the US markets that they didn't have before. And that works great for their value chain, because now they operate from the Windward and Leeward side of the Caribbean, operate from out of the Great Antilles, way out into the east through Europe, between the Netherlands, Spain with Cole Beverage Laboratories, and now they have their setup out in Miami. So their line of shipping services is very beneficial to them, especially as a production company manufacturing the snacks and beverages that they do. So it really just buys into their own value chain. So it's easy of production and shipping between point A to point B to point C. So I think that's a great opportunity, because Jamaica Producers is always eyeing out for new opportunities, right? At the end of December 2021, they still had out about $1.2 billion in cash, which is great to further allocate should they want to continue along their path of acquisitions. Let's actually head into the numbers a little bit more now. We see that at the end of December 2021, they increased their revenues about 19% from 20.9 billion to 25 billion. They managed to increase their gross profit margin by 28% from 5.5 billion to 7 billion. And then, ultimately that trickled down to their net profit margins. So the net profit for 2021 actually increased 2% from 3.7 billion to 3.8 billion, setting up their earnings per share, which is the earnings attributable to each shareholder, to about $1.93, down to about $1.64 due to a little bit of differences in the way how the accounting worked out. But it's actually a great company for the long term. They're very strategic on how they do things. They own a proper portion of the value chain, and they're always looking out for new opportunities. I think Jamaica Producers has a lot more growth, especially with moving further and further out of the pandemic. So what the restrictions might have been in Jamaica and Europe and some of the other places won't be what we're going to be seeing, say, further down the line come next year. So the advancement from there and how they're going to continue to pivot and take advantage of all their and moving their products through the logistics services is a great opportunity in my view. So as you can see here, from 2018, from about Q4 2018 to about the second quarter of 2020, the profits were fairly steady, moving between anywhere between about 127 to just below $400 million in profit before exploding in the third quarter of 2020, where they hit about $1.6 billion. And then from there on, it's been a gradual growth from 2020 onwards, where they had hit another high of $1.5 billion, right? Now, a lot of this will be attributable to their logistics services, for example, Kingston Wharves, and since in 2021 when they acquired Geese Line, right? As I said before, the movement of their products from Jamaica throughout the rest of the Caribbean and then further out into Europe is very beneficial to them, and they continue to benefit from the increase in logistics services and the shipping lines, right? So I believe that's the bread and butter right now for them, trying to focus on the logistics services before they continue to step out into the food and beverage side of the thing, right? And then further from there, you can see the stock price has been fairly stable over the last 2-year mark, ranging between about $22 to about $27. Right now, it's fairly priced with $22.75 at close of March 29th, with a PE of about 13.8 times. And further from there, with continued growth and continued expansions and acquisitions, especially with the joint ventures that they're having, we should be seeing continued growth towards their bottom line. All right. Dan, is there anything you'd like to add about Jamaica Producers?
It's a good company, certainly blue chip in my mind in the good right industry. As we expect Jamaica to continue growing and expanding in infrastructure and development, and we think about Jamaica being a great location from maritime hub and logistics, this is just a well-positioned company. Through Kingston Wharves, they're exporting, transshipping to maybe 29 different countries, and I only see that business getting bigger and bigger. So this is definitely a good one to hold for the long run. Great one to have for the big pension funds. It trades with good volumes, has good market cap. Generally speaking, great company. The only concern I have is the one-off pops and profits that we see from time to time, as opposed to good consistency throughout. But still a great company all in all. Thanks for that, Justin.
No problem.
Okay, moving on with the program. Next up, Carreras. Great. Okay, first slide up shows us the financial performance for the 9 months ended December 2021. Obviously, Carreras has a March year end. This is just a great company, owned 50% by British American Tobacco, has a great board, great management in place. Chairman Oliver Holmes and the managing director Raoul Flynn, a great guy with great experience who's been at the helm for about 2 years now. And they are doing fabulous. Coming out of the pandemic, as we come out fully, I expect them to continue growing, but look at this already, showing 15% growth in revenues up to $11.7 billion, gross profit growing similarly to $5.6 billion, and that sort of just flows all the way down to the bottom line through some contained operating costs. You see the profit for the year attributed to shareholders growing by 18% to $3 billion. That's a earnings per share of 63 cents, which at today's stock price of $8.60 translates into a conservative PE of 10 times in a market where the average PE is about 15 times. So I'm definitely looking for 20 to 30% growth in valuation from Carreras. It's a stock a lot of my friends often say, oh, but they're not growing, they're not growing, they're not growing. But the point is they're turning consistently $3 to $3.3 billion in profit, paying out a dividend ratio of about 90% of that profitability. That dividend yield at today's stock price is translating into a whopping 9.79%, best in class by far. And so it's a great stock to have in your portfolio from a dividend yielding perspective. And it still, folks, has potential to grow by 20 to 30% in my view. I mean, you can bank on Carreras dividends, just paid dividends literally on first week of March, which was about 21 to 24 cents. So they're being very consistent with their dividend payout ratio. Next slide shows the earnings. And again, you can see in the last 3 quarters, earnings coming up steadily. So again, as we come out of the pandemic, there's a possibility for this earnings to grow further. Next quarter, I expect to see that earnings growing further as we come fully out of the pandemic. So, just quick recap, looking at the stock price on the next graph. This stock has traded up to as high as $10.50 in the last 12 months. In my personal portfolio, my average holding cost is $12, and it doesn't bother me because I do believe it's going to go back there eventually. It's a great, solid company, turning over $14-15 billion in revenues annually. 50% of the cost goes into taxes that they're paying over to the government, over $6 billion in taxes being contributed by this company to the GOJ. And one of their biggest challenges is the illicit trade. I mean, their revenue could grow by 20-25% if they could get slightly better support from the government in dealing with the illicit trade. But that's just another problem that Roll is going to help them solve, I suspect. So they've got the innate potential to grow their earnings by 20 to 25% by dealing with the illicit trade. We see vaping becoming a lot more popular. We could even see eventually a crossover into the marijuana industry or hemp industry as those regulations come to fruition in the US. And so I think it has potential for growth, 20 to 30% growth. But more importantly, it's just a solid company with no debt, no large capex requirements. That's going to give you 9 to 10% dividend yield. So I think in an environment where folks are sitting on cash earning 3 to 4%, even despite the fact that the BOJ is driving up interest rates and you can now get 6% on 90-day Treasury bill yields, you can buy Carreras stock, get a 9% dividend yield, and still see the potential of that stock to go up 20 to 30% just because the PE is trading at about a 40% discount to market. So I'm definitely bullish on Carreras. I recommend you guys to go and get yourself some. Justin, what are your thoughts on Carreras?
Yeah, Dan, absolutely. So whenever my clients come to me and they're serious about dividend investing, Carreras is always the very first thought that comes to mind. As I said before, with like a 9 to 10% dividend yield, you scarcely find companies that come anywhere close to that, especially on such a consistent basis, right? And even further on that, with the points we're bringing up, really the illicit cigarettes. So the global shipping challenges we've been having are a bit of a two-edged sword for a lot of the companies, but then that also impacts the trade and the bringing of these illicit cigarettes, right? So with Carreras and the actual proper supply line from British American Tobacco, as well as the other companies that they align themselves with, right? They're much more ahead of the game than the people who will be bringing in the illicit cigarettes, of course. With that, I think Carreras is really well positioned, and as I said before, if you're a person who's very serious about dividends, then you need to be checking out the stock.
Great, thanks for that. So next up, we have our Investors Corner, and Justin will be bringing us some invaluable insights. What do you have for us, Justin?
All right, today I want to get us back to the core of why we get investing in the first place. Right, we always have to be mindful of what exactly we're looking for. We have to have a clear idea in our mind of why we're investing, find our goals, find our targets, so that way we can better align ourselves with what we're going for, right? So it can be very simple. It can be something as simple as, okay, I want to pay my light bill for this month, or I want to pay a set of bills going up, or I want to find some money to buy my first car, my first house, right? It's very important that we have a clear idea of what we're going for, so we can figure out our investment strategies along that line, right? Because that's going to inform our risk management. It's going to inform how we allocate ourselves. It's going to inform what exactly we're looking for and what we take on, right? So it's very clear to all of my viewers right now that the Jamaica Stock Exchange is probably one of the best avenues for wealth creation locally that you can find, right? You don't have to be a very serious investor. You can have some cash and you can bring it to a financial advisor, preferably down to Mayberry Investments, and then we can take it from there and try to advise you as best as possible within your timelines, within what you're looking for, and we can find something that works best for your risk appetite.
Great. Thanks for that, Justin. I agree totally that when you're investing, you need to have a clear plan and a timeline, set yourself some goals, and be steady and consistent. And I agree totally. The stock market is the greatest means of transfer of wealth for those who are patient. Well, that's it for today. We're going to keep it short and sweet. To our viewers, thank you all for being part of today's Investor Update. I'd also like to thank my fellow panelist, Justin Scott, for his valuable contribution to today's discussions.
Thanks again, Dan.
Thanks, Matt. Don't miss our Investor Forum, which resumes in the coming weeks. Be sure to follow us on social media to find out who our next speaker will be. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you to all our viewers for tuning in today. Keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.